How's it going, everybody? It's Tas here. Hope you guys had a great weekend and are ready to get back into it. I for sure am. And in today's video, like we do every single Sunday, we're going to be breaking down my game plan for this upcoming week in the stock market. We're going to break down some stocks, some charts. We're going to talk about some earnings. And we also have to break down the Fed because this week we have a Fed meeting. We're going to be seeing a lot of talk about tapering, interest rates, the economy, jobs, all that good stuff, and it's going to be the point of focus for the market. So sit back, relax, hit the like button, subscribe, check out my Patreon, get your 5 stocks free from Webull. That's linked down below, and you could also get $50 from M1 Finance, also linked down below, and let's get right into it. So before we even talk about the Fed, before we break down stocks that are reporting earnings this week, let's go over what happened last week. Let's take a look at SPY and Triple Q, and we'll talk a little bit about the VIX very quickly. So let's get into it. SPY ended up breaking out of 470 in the end of the week last week, or more towards rather the end of Friday. You guys can see here on the intraday chart, SPY saw a bit of a sell-off on Friday down to 466, and that was at about 11:15 a.m. on the East Coast, and then we ended up ripping for the rest of the day from 466 to over 470, and now that I'm looking at it, we actually got to 471 in the aftermarket hours. So we're clearly breaking out of 470, which is a very critical resistance stemming back from pretty much all of last week and from the end of November. And we're also noticing the ascending triangle playing out that I called out in last week at some point. When was that? On Friday. We talked about this ascending triangle. So the fact that we're seeing that breakout, that's a very good sign that this wants to fill the gap to about 473, 474, which is the all-time high from back in the end of November. So watch out for this breakout, this momentum that we saw in the latter half of Friday and aftermarket hours. Watch for this momentum to continue. And of course, we'll see what the futures are looking like. We'll see how pre-market looks like tomorrow. But as of now, and by the way, the futures aren't open now, but as of now, based on what happened last week, SPY looks pretty bullish. Triple Q, let's take a look at what's going on there. Triple Q is also looking decent, but not as bullish as SPY. What we're noticing here is an inverse head and shoulders. We have the left shoulder head, right shoulder. We see we held right above the 180 SMA on the this is the hourly chart. We held above it. We rallied, we closed above the 50 moving average on this 20-day chart, and we're pretty much on our ways by the looks of it to try at least to complete this right shoulder and the inverse head and shoulders. And I have my alert set at 400. Actually, no, it's at 401, where if we break that point, that is where I believe we will complete the right shoulder. So we're on our way, but we're not quite there yet. We have to break 401, which was resistance all of last week and about 2 weeks ago in the end of November. So if we break 401 on Triple Q, this is probably going to fill the gap to about 408. Again, if SPY breaks, well, it already did break 470. If it continues this momentum, we're probably going all-time highs. And when it comes to the VIX, the volatility index, this got completely clobbered last week. Do you guys remember? We hit 35 on the VIX, which is, I believe that was a yearly high, or pretty dang close to the year high. Yeah, the year high was at 37.50. That was back in February. We hit 35 last week. So the fact that we're down now under 20, that's a very good sign. And that goes to show how quickly the VIX fluctuates. We were at 35. Now we're back under 20. All in 1 week, under a week. And as long as we're under 20, we start moving into the teens, which we're in the teens right now. Volatility is going to be in a good spot. But who knows? Now that we have the Fed meeting, which we'll talk about now this week, volatility could easily be right back to where it was early last week. We might be going back to 25 plus on the VIX. Who the heck knows? 30 plus if things get crazy. So the Fed meeting this week, let's talk a little bit about it. We'll touch base on what to expect. So the Federal Reserve holds its 2-day meeting on December 14th and 15th, which is what? Tuesday, Wednesday. Yeah, that's Tuesday and Wednesday. And the central bank is expected to discuss speeding up the end of its bond buying program, which we all know that's what they're going to be discussing. We've all, heard about this. We should all know about it for the most part at this point in time. And in November, to give you guys a little background, the Fed announced it would wind down its $120 billion in monthly bond purchases at a pace of $15 billion a month. So you guys remember, ever since the pandemic began, quantitative easing, boom, it went up. It went straight up. They were putting a lot of money into the economy. So now they're looking to tighten, right? We have quantitative easing. We have quantitative tightening. And now we're slowly winding back. That's what the Fed's doing. Monthly, $15 billion a month. I think it's I forget how it's split. $10 billion from I forget which categories is losing $10 billion a month, which one's losing $5 billion. But all you got to know is $15 billion is coming off of, the $120 billion per month at this point in time. And if it speeds up the process, strategists say it will finish up by March, meaning they won't be putting in any money, or they won't be buying any bonds in March, which is pretty interesting. We'll see how that ends up panning out. And with bond tapering expected to speed up, interest rate hikes, good old interest rate hikes, could be coming sooner than expected, right? Which is kind of, that's one of the reasons why the markets sold off about a week, 2 weeks ago. We started seeing that selling because the market started pricing that in. And we also have a lot of other things this week. Not only the Fed meeting, which we just talked about briefly on the 14th and 15th, we have the producer price inflation number on Tuesday. This is a price that measures the average changes in prices received by domestic producers for their output. That, along with CPI, very important to take a look at. We also have the retail sales report, which is out on Wednesday, and industrial production, which will be released on Thursday. So this week, guys, when it comes to the overall economy, it's a very big week, important week, and we have to be on our P's and Q's this week, guys. We have to be very attentive. We have to pay attention to everything that's going on, and we have to be just really ready for anything, because at this point, with how the markets have been moving up and down, volatile, V-shaped recoveries, big drops, we just have to be prepared, because anything could happen with Jerome Powell, speaking, and the Q&A and all that good stuff. And who knows? Let's say he says he doesn't want to wind down, or rather speed up this, tapering process. Let's say he wants to cool it a little bit and maybe go a bit slower. That could shoot the markets up. Let's say he wants to speed it up more than expected. That could shoot the markets down, because interest rates will be going up sooner than expected. So a lot's going to be happening. I would love to know your thoughts. Let me know down below in the comments, and make sure to hit the like button if you haven't done so already, and subscribe to the channel. Hit that notification bell as well. All of those really help me out in the YouTube algorithm, guys. And like I've said, I don't know if we'll do it, but I'm trying to hit 25,000 subscribers by the end of this year. And I can't do it unless you guys subscribe and help me out. And again, I do appreciate all of you out there watching. So now that we talked about the markets a little bit, charts, technicals, all that good stuff, the Fed, let's go over some stocks that I'm looking at this week, a couple of which we'll talk about in the beginning, are reporting earnings. So number one is FedEx, ticker symbol FDX. This is a stock that I personally own. Full disclosure, I'll put it right out there in the beginning of this portion of the video. I own FedEx. I bought it, I think, at like $227. Maybe $228, something like that. A couple of weeks ago, I bought it, and now I'm sitting up about $20 per share. Nothing crazy. Up about 7-8% on my position. And full disclosure, it's a longer-term position, because I just think FedEx is a great company, and it's down 30%, or it was at one point down 30%, and I figured that was a good time to start buying in, as I did want to own FedEx at one point. And like you guys probably know at this point, when it comes to long-term investing, you shouldn't just buy any old stock at any price, right? You have to wait for the right price. And for me, FedEx being down 30%, I think the PE was very low from what I remember, right? That was a time for me to start getting in. So I started buying FedEx. I'm long, I'm in, and I don't plan on selling. And they report earnings on, let's take a look here, the 16th. So that's in 4 days. What is that? Wednesday or Thursday, whatever. Or no, wait. That's Thursday, yeah, because the Fed meeting's 14th, 15th. So Thursday, FedEx is reporting, and I'm noticing a bit of an inverse head and shoulder here. Now that I'm looking at the chart, we're noticing left shoulder. We got the head right here, and then we got the right shoulder right there, right? So in the very short term, this might make a move up to the 250, 255 level, which was resistance back in the middle of November. And that could happen heading into earnings because, again, earnings are later on in the week. So it's not like it's on Monday and the markets or FedEx doesn't have much time to make a move before earnings. We have 3.5 pretty much 4 days if they're after hours on Thursday, which I'm assuming, yes. After market hours. So we have Monday, Tuesday, Wednesday, Thursday for FedEx to make a move before earnings. That could very well happen. So I'm looking at this in the short term. And obviously, like I said, I'm long in FedEx for a long-term investment. So I really want to see how they are doing in the current environment we're in. And on top of that, they pay a nice dividend. Let me pop it up on my Yahoo Finance. I think it's right here. It's 75 cents. But I'd want to know the percentage. What's their percentage dividend yield right now? It's 1.2%. Nothing crazy, but it's better than nothing, right? Better than nothing for a company that is a pretty solid company, and their P right now is a 13, so it's still pretty low. I got in a bit lower. I think when I bought it, the P was like 11. But yeah, I'm long FedEx. I'm watching it. I'm excited about it for this upcoming week. Adobe is another one that's reporting this week, which I made a video on Adobe months ago. I think it was called Adobe Stock Analysis or something. We broke it down, and they report earnings on the 16th, same day as FedEx on Thursday. And I mentioned in that video, I want to own Adobe so bad as a long-term investment. It's just the price never comes down. I feel like this is one of those stocks where it clearly trades at a premium. I mean, you'll notice in the markets, you probably already know this, but there's certain stocks that always trade at premiums. It's just how it is. And you really have to be you just have to be patient and pay very close attention to them, because when they do sell off, you might only have a little bit of time to get in before they're back at a premium again. And Adobe just hasn't sold off for me, guys. Adobe is, again, one of those stocks that I think is a great long-term company. Strong moat. I love it. I use it every single day. I use Photoshop every day for the YouTube channel, right, and for other things. And it's just such a great product. The products in general, what's it called? Photoshop, Illustrator, all those, After Effects, Premiere, great products. It's just the company, the stock price never comes down. I mean, come on. I would love to buy Adobe under, if it was, if I could just snap my fingers and pick a buy point where I think it would be a good value, $300, $400, and now we're almost at $700. So it's very overvalued in my opinion here as a longer term, if you're looking at it from a longer term perspective. But if you're looking at it as a swing trade, maybe a quick day trade momentum play, I think it's still pretty solid. If we break out of the wedge here on the 4-hour chart, as you guys can see, we're in a wedge. And we're about to break out of the moving averages. In fact, we're already above them. We closed above them on Friday. Now we just have to clearly break, let's say, 660. So I'm going to put my alert at 660. If that level breaks, 700, probably going to happen. It's probably going to happen. And that's great from a swing trader's perspective. But again, from a long-term lens, not the best. And this is why I always say, guys, make a watch list of stocks, 5, 10, 15 companies you really understand, and just keep an eye on them, because when the markets do correct, which will happen at some point, these stocks will go on sale, they'll go down, and if you have cash, which I recommend all you guys have some cash, a cash position, you'll be able to take advantage of these when they go down. So Adobe's one of those for me. Darden restaurants is another one that I'm looking at right now. DRI, this one's down about 14 bucks from the recent high. That was back in, when was that? Actually late September. So it's down about 7-ish%. Earnings are coming up on the 17th. So that's on Friday, guys. So Friday, we have Darden Restaurants, and they own restaurants such as Olive Garden, I think Capitol Grill, Yard House, which I love Yard House. Great food over there, great drinks and so forth. What else? I forget. I don't want to just make a mistake and tell you a wrong restaurant that they don't own, but I know they own those three and a bunch of other ones. And I think it's a great business, to be honest, guys. And at this point, the chart looks pretty good as well. I mean, if you guys take a look at this chart, look at that. We're clearly in an uptrending channel. As of now, on Friday, the stock went up 1.5%, closed above both moving averages. I see a big window of a gap, if you will, up towards 165 coming, and that obviously depends on earnings. And like I said with what was it, FedEx, this might make a move early in the week into earnings because they report earnings later in the week. So DRI, watch it very closely. Darden Restaurants, not many people know about this one, but you probably should get familiar with it. I think it's a pretty good stock here, short and long term. AMAT, Applied Materials, is another one that I'm looking at. We saw a clear bounce above 145. That was earlier in this month. We ran from 145 to 157, got some profit taking. Now we're back at 150, 152, right by the 50 moving average, right? So I think this is simply profit taking, a bit of a sell-off. I think buyers will step in again between 150, 152 and push it higher. Maybe even past 159 into the 160s. So keep your eyes on Applied Material. The momentum is there. I think it's going to be breaking out. GM is another one I'm looking at. General Motors. This is one that we see a clear-cut inverse head and shoulders on, and it actually already played out. I mean, look at this. Left shoulder, head, right shoulder. We had the whole right shoulder complete to 65, and the left shoulder was at 65 as well. So this is a textbook inverse head and shoulders. Then once we completed the right shoulder, we got the sell-off down to about 57. Buyer stepped in around the moving averages, right? Pushed it right back up, and we're just clearly uptrending. You know, if you look at the past couple of months of data here, clearly uptrending, and on Friday we had a very strong day. GM and Ford, for that matter. Ford ripped. GM ripped as well, up 6%, and it's breaking out. So I think at this point in time, well, it's not fully breaking out. I don't want to say that. It is above the moving averages, but we still have 65 ahead of us. So I think ultimately GM will be going to 65, and don't just do anything because I'm saying I think it's going to 65, guys. Always do your own research. I could be wrong, but based on the momentum that I'm seeing here, 65 should be in the cards, right? If that breaks, guys, look at the max chart on GM. This stock was a $95 stock back in 99, 20 plus years ago, and now that everything's going electric, we're seeing a lot of these companies transform to that, which is the next phase of vehicles, whether you like it or not. I personally, do I like Tesla cars, electric cars? Sure, I do. But I also like gas cars, guys. I'll be the first to tell you that. I'm not one of these fanboys that's like, EVs, yes, EVs for days. I only want EVs. Truth be told, guys, I would love a Porsche 911. That's not an EV. Maybe I could get the electric Porsche, whatever, but I prefer the gas one. I'll just be the first to tell you. I would love a Challenger. You know, I would love whatever. That, and they're all gas guzzlers. So don't get on my case, guys, but ultimately, whether you like it or not, whether you're gas, whether you're EV, or in the middle, kind of like me, we're seeing the transition, and these companies are doing well. And I'm telling you, if GM breaks 65, we could end up seeing a breakout towards probably not 95 in the very short term, which would be a huge move. We're not going to see that, but could it go to 70, 75 over the next however long? Yes, definitely. So keep your eyes on GM. I'm also looking at Microsoft, which we called out last week, and I'm watching it this week. You guys can see a clear cut, if I can get the ticker symbol up here. Come on now. There we go. You guys can see inverse head and shoulders, left shoulder, head, right shoulder, breaking above the moving averages, continuing the uptrend overall. I think Microsoft is going 350, which was the all-time high from back in the end of November. And quite honestly, I think it could break 350. We might be making a move towards 370. 365. I see that coming for Microsoft. So set your alerts there, 345, 343, wherever you want to set them, set the alerts. And Cisco is another one, CSCO. This one, we saw earnings. Earnings were decent about a couple of weeks ago, almost a month ago at this point. Broke out of the moving averages. Now on Friday and last week, we got a lot of momentum above the wedge that you guys can see on this 4-hour chart. And we had a 3% green day on Friday. So I think Cisco breaks 60. I think it hits a new high on this 4-hour chart. I do think it could go mid-60s, high 60s, and maybe we start going to those highs from the dot-com bubble. And just look at how quick, if we do a little history lesson here, guys, look at Cisco back in the dot-com era. This was a $5 stock, $4 stock in 97, right? In April 97. And by April 2000, in a 3-year span, it went from $4 to $82. This is crazy. 4 to 82. The bubble popped, and this is the scary thing, right? If you buy stocks that are in bubbles, right, it might take you decades to recover your money. Just imagine if you bought Cisco at $60 back in 2000, you would still be underwater. Same thing with Intel. If you bought Intel back in 2000, right, at $65, you'd still be underwater. The stock's at 50 today. So I guess that's a good spot to end the video, right? Be careful if you see stocks and you think, oh, valuation doesn't matter. Oh, bubbles don't exist. You're fooling yourself because they clearly exist. Intel, Cisco, these are great examples where if you bought 20 years ago, most likely, near the top 20 years ago, you're not going to be up at all right now. And sure, maybe with dividends reinvested, I'm not going to do the whole math equation here for you guys, but you get the point, right? Be careful out there. This stuff is real. So hit the like button, make sure to subscribe, drop me a comment, let me know your thoughts, and check out my Patreon. If you guys want all my buys, sells, call outs, morning update videos, more access to me throughout the day, plus more, all of that's on Patreon, link down below, or you can go to StockSurfest.com/Patreon. That's StockSurfest.com/Patreon. And do you remember I told you on Friday, Webull upped their game. They're now doing 5 stocks instead of 2 for a limited time. So use my link down below, and you don't even have to deposit $100. You can literally deposit any amount of money, $5, $10, whatever, and we each get 5 stocks up until I think the 20th of this month. So make sure to get your 5 stocks, your $50 as well from M1 Finance. All of those are linked down below. I'll catch you guys in the next video. I'll pop one up here. 3 growth stocks to buy in 2022. Check it out. I'll see you there. Thanks for watching. Again, as always, keep crushing the market. Stay safe out there. Peace out.